If you're looking at purchasing a property that has any sort of business component to it, there's some things that you're going to have to look out for while you're doing your due diligence, and make sure that you document in your agreement of purchase and sale. The main thing is whether or not the sale of that property is going to be subject to a provincial sales tax. In this video, we're going to go through a few things to look out for and the dynamic around that. So if you're looking at a property that has any sort of farming component, maybe it's a stable where the seller has been renting out some stalls for some extra income. Maybe it is a legitimate piece of farmland and there's been income being generated. Any property that has an income component to it may be subject to a provincial sales tax at the closing of the transaction. Even if you're not looking at operating any sort of business with the property or carrying on the previous business that's been running there, it's still something that you really need to pay attention to. Again, the sale of that property might be subject to a provincial sales tax, so make sure you talk to a lawyer and an accountant that are well versed on how to navigate this aspect of a trade. This is definitely not legal or accounting advice, so make sure you talk to a professional that understands this very clearly. If you already have a business number, then what you might be able to do with the help of your accountant and your lawyer is fill out a declaration form. And that form is called the GST-HST election form concerning acquisition of a business or part of a business. With this form, if you already have a business number, it could allow you to actually sign off with the seller, basically that you're going to self-declare the HST, which basically means that neither party has to pay the HST on closing, because it essentially is just going to become a tax deduction anyways, so there's no point in paying it if you're just going to claim it back. Everyone's situation is different, so make sure that you speak to an accountant and a lawyer about how to navigate through this. This is definitely not accounting or legal advice. If you don't have a business number and you're not planning to operate a business or carry on a business that comes with the property, that's where it can be a little bit challenging, where you might have to work on the negotiating during the deal of the property. The sale of the property may be subject to a provincial sales tax, but the seller may not want to pay it and they may expect you to pay it. So make sure that you have a good understanding of how your agreement of purchase and sale is written up. And it could just be simply something that you have to negotiate on. If you really want the property and the seller is adamant that you pay it, you have to be able to account for the extra capital that you're going to be required to pay that tax on closing. Also, the sale of the entire property might not be subject to the provincial sales tax. It might only be a portion of the property. Maybe it's a couple acres that the business was being run on, but not necessarily if there's a primary residence on the property that you're going to be living in. So again, it's a little bit more of a complicated subject. So definitely have to do your due diligence on how much of an effect that provincial sales tax is going to have on the ins and outs in the sale of that particular property. So this is something we occasionally come across when we're looking at some rural properties. So at a high level, that's just some basic information. Hopefully you found that useful.